Hockey here from the Pure Alpha Trading Group. I wanted to take a moment to make a quick video this morning on genetic technologies and what I'm watching for and how I'm going to play it, clear up some confusion about a few tweets, and talk a little about CAPN Inc. This is an hourly chart of Gene, ticker GENE, with a fib retracement from the start of the big move to the end of the move. You can see that we already got the 50% retracement, and now we are in the middle of what I believe is a dead cat bounce. In my blog post before the drop, I wrote about the signs that I saw that the backside of the move was coming soon, and it came very soon. Now I have confirmation that we are on the backside of the move, so what this means is that the shorts are going to be more willing to get aggressive as the stock bounces, bag holders are going to want to sell as they break even, and I firmly believe the squeeze is over. The move up to 4 was a fluff story hype in a low float name. From 4 to 11 was purely a short squeeze. Early shorts got aggressive and stock didn't break down, so they ended up getting squeezed from 4 to 11. Many, likely most shorts, covered on Friday after the 30% drop and are eager and willing to add to the move as we bounce here. I am, other funds I talk to are, and a lot of short sellers on Twitter are looking for a low risk play to get back into this name. In Aussie land, genetic technology is up to about the 780s, but there's a reason it remained at 7 adjusted until the Nasdaq after hours were closed. The Aussie board doesn't trade anywhere near the same volume that the Nasdaq ADR trades. It's what I believe is an attempt to get some optimism into the US Open to unload bags on retail traders. 874 is still my line in the sand here. If that gets broken, that's my soft stop, and this gets into the tweets that I mentioned. You can see them here. If that 874 level is broken, that will tell me I'm wrong. I got a friendly email from a follower on Twitter asking for clarification about my tweets on soft and hard stops. Essentially, I believe a stop is inherently an emotional response. Now, most professional traders would balk at that. Nevertheless, I believe it is true, certainly of me, but I think it is true of everyone. When you are stopped out of a position, you are more prone to emotions afterwards. If the price recovers, you wonder if you got out on a stop run, and sometimes want to get back in. I see this over and over in retail traders. I always want to be selling on relative strength and buying on relative weakness. So this 874 level is my soft stop. If that is broken, it will indicate that I am wrong, and I will buy to cover on the first oversold condition that I see. If that means it goes up to 10 and back down to 925 before I see an oversold condition, then I'll get out at 925. I would much rather be in control of my emotions and feel good about my exit getting out on relative weakness. More often than not, because the price action is random and fractal, I actually end up getting better fills than most who stop out at an obvious level, as the price retraces back past the stop level. Hard stop would be above the 52-week highs, and it would be an emotional response, but a necessary one to cut losses before they cascade out of control and I become a big bag holder. My style is much different than most people's. I keep my positions small so that I can be in them for the big move. I don't try to be exact in my timing. Price action is pretty random in the short term. My goal is to establish a good risk-defined position that has a higher probability of going in my direction than getting stopped out. And this brings me to CAPN, ticker CAPN. With Gene, if I pull up a daily chart here, I have a lot of history to look at. The company has a history in the medical field, and the shareholders have a history of holding bags. There's a lot of overhead supply. With CAPN, everyone who is long is now green. Add to that a lot of eager shorts now wanting to get in after they missed the Gene collapse because it looked easy, and the low float, and this could get out of control quickly. I'm not saying it will, but it's a risk I can't really define at this point. Further, I haven't been able to properly define the risk that their technology actually succeeds, that they're able to penetrate the medical field. So I don't have enough information to establish a good risk-defined position in CAPN Inc. Most retail traders just look to jump onto the bandwagon. They see a name that's hyped up and they'll buy without actually knowing what it is they're buying, what the company does, or what price they're paying for this company. I have a notebook filled with story after story, hype stock after hype stock. It is what I would call the tombstone of bag holders. Gene is playing out exactly as dozens and dozens of other overhyped stocks have played out. and the ending is always the same. I don't yet know whether CAPN will play out this way. It certainly could, but I need to have more information before I make that judgment call.